What's up, guys? This is Diego, and I'm a professional trader. Are we gonna see a big drop on Bitcoin? Well, like I said in my previous video, I wouldn't long until we took one of these two weekly lows. And at the moment, we are working on a possible lower high. Yesterday we bounced, we stopped out a few people, we had a little short squeeze, and then we got rejected by another block right here on the 15-minute chart. I'll show you later. And then we got a pretty big drop. And now we are working on a possible lower high for much more downside. Because if we break these lows, we follow through, we're gonna have the weekly candle is gonna turn red. We're gonna have a lower high on a weekly candle like this, low, high, and then we're gonna lose the weekly open. And we're gonna have a red candle with, like I said, a clear lower high, and that's gonna be very bearish. And that would be very bearish, actually, not just from a mid-term, short-term standpoint, but even from a long-term standpoint. So I think the following days, possibly even today or tomorrow, they're going to be very crucial to determine which side of the market is going to win. Personally, I'm leaning a little bit more bearish, at least to take 1 and 2 and go from there. But of course, if we take the second one and we get follow through, we get a clear breakdown, then I think it's going to be very bearish to take the 25K low and probably even the 19K low. Actually, if we take the 25K low, I'm pretty sure we're going to take also the 19.5K low at least, and possibly even going to the 15.5K low. And sure, I'm not saying that this is going to happen in like 2 weeks. No, of course not. We went up in over 200 days. So if we have to go down again to 15K, probably it's going to take, I don't know, 2, 3, 4 months, maybe 5, 6, and so on. So of course it's going to take a long time, because sometimes the market goes impulsively and then it ranges for like 3 months, goes impulsive again, ranges for 2, 3 weeks, like here, ranges for weeks and weeks and weeks. These are weekly time frame, by the way. So that's how the market works. We go from trending to ranging, from trending to ranging, and so on. But let's go on a lower time frame. Let's check out the daily, because I want to show you how the previous day closed and what the wick looks like, because to me it looks pretty bearish. Let's take a look. This is the daily chart, and this is the range we are currently in. And of course this range has to break eventually. It's been going on for 17, 18 days, maybe even 19. It has to break. I mean, that's the nature of the market. It can't keep ranging forever. It has to break. And eventually it will break, maybe today, tomorrow, in 3 days, next week, I don't know. But of course, the longer it goes on, and the higher the chances are that it will break. And yesterday, we took these two daily highs that I was talking about in the previous video, 1 and 2. And then we got a short squeeze to fill out an inefficiency that we had on a lower time frame here on this candle. And then we got rejected. I'm going to show you later where exactly. From this order block that of course you can't see right now because it's on the 1 hour time frame or the 15-minute time frame. We got rejected from there, and then we formed a very long wick that, to me, it means that the market rejected pretty hard the price. And now we are working on creating a lower high, possibly, and then break this low right here, creating a lower low, and take all the lows and go from there, possibly drop even more. At this point, I'm just looking for shorts. I'm not looking for longs until, like I said, we take at least this one. And then, of course, if we take it and we bounce back up, I can long. But at the moment, I'm just looking for shorts. And I already know, well, first of all, I already am into shorts. But I want to maximize my bias if it's right. Of course, if it's wrong, I'm going to lose fine. But because usually my bias is right, at least, I don't know, 80% of the time, I want to maximize it. I have a short from here, from the last week. I have a short from yesterday, high, right here. I'm going to show you later how I took it. And now I want to take even another one on New York session of today, which is Tuesday. And I'm going to show you in a lower time frame how I'm going to take it. Let's go on the 15-minute time frame. Okay, this is the current price action on the 15-minute. As you can see here, is the high that we rejected yesterday. How did we reject? From this order block. This order block right here, as you can see, is basically the only piece of price action that we had on the left. We filled this inefficiency, which is basically where there's no price action. We filled it pretty quickly. Then we got rejected by the bottom of the order block. There we changed market structure. We had a big drop that tested the previous range, which is a bearish sign, of course, because you don't want price to re-enter the previous range for a bullish scenario. You want price to keep going up. You never want to see price re-entering a previous range, if you are bullish, of course. To me, that I'm bearish, I'm happy to say this, because to me, it's another possible short opportunity. And at the moment, the easiest setup that I'm seeing is a market structure change by taking this low. So lower low, possible lower high, and if we break down lower low here, enter right here, stop loss always based on market structure right here, and then I'm gonna expect a move down to take all the lows at least and go from there. So to me, this is the easiest setup that you can take. I think the ratio is pretty good because this could actually be a swing short. So I'm not gonna take profit soon unless after we took the last low, we're gonna clearly bounce back up. At that point, I might close the trade. Maybe I'm gonna close another trade also, and I'm gonna just leave the last one running just in case. And a long, I'm gonna open a long. But at the moment, I think this bearish scenario has a big potential for a lot of downside. Of course, we have to take the low first and see what happens. But yeah, this is the easiest setup that you can take. Market structure change, enter here, a conditional market order, whatever you want to call it, stop loss here, and see how it goes. And now I want to show you on a lower time frame how I shorted up here. I use the 5-minute market structure. Sometimes I use the 5-minute, sometimes the 50-minute, sometimes the 1 hour, depending on the volatility, depending on how price action looks like. For example, here, we went up so quickly that I decided to use a lower time frame in this particular situation. But if price action is low, I will use a higher time frame like the 50-minute, for example. So in this particular situation, we got rejected by the bottom of this order block. Let's say if I can pinpoint it. As you can see, you rejected exactly to the dollar, which is of course not a coincidence. It's actually pretty standard. And then where do I enter? I entered when I saw a clear market structure change. Low, possible, lower high. I didn't enter here yet. I entered here when the market structure change was confirmed. And then a big drop came, and now we are working on dropping even more, possibly. Hey, maybe I'm wrong, who knows? But this is a good entry. The market is very repetitive in this situation. If the level is good, you get a market structure change, it's gonna work most of the time. Where did I place my stop loss? Again, always based on market structure, at the high, right here. Entry, stop loss, drop, didn't take profit yet because I'm waiting for lower. This trade has swing short potential. That's how I'm gonna play it. And maybe today we're gonna see whether it's very bullish or very bearish, because I think after we break this range, it's either gonna be very bullish or very bearish, not something in between. We've been in this range for such a long time that I expect some kind of explosion out of this range because we have accumulated so much fuel. It's been like 17, 18 days. Actually, You know what? Let's take a look exactly how long it's been. Let's use the 2 hour. Let's say that the range started at this high right here. It's been 17 days and 22 hours, so almost 18 days of sideways, kind of boring price action. So of course you can expect a big move after this range breaks, and of course it can last forever. So it's gonna either big move down, big move up, taking this one, or up from here. Those are the probable scenarios. I'm leaning slightly bearish because I think taking this low is very dangerous. That's a very important low that could signify a market structure break on a higher time frame. So taking this low right here could give a big drop. Of course, I don't have a crystal ball, so I don't know for sure what's gonna happen. But I'm ready. I'm ready to trade it. And, you know, if I'm wrong, I'm gonna long, no problem. And when I am, I try to make the best out of it. I change my bias immediately. I switch trade from short to long, from long to short, and so on. And I try to make the most money I can. Thank you so much for watching. If you like the video, please leave a like, leave a comment, and subscribe. Thank you. I will see you next time.